Hello everyone and welcome to Day Trader S&P 500. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top ranked stock market timers. And while I've been trading for 30 plus years, we recently started our day trading service. We're in year 3 of these accounts. You can see our track record there, and as it notes up here, I average over 700 trades a year, sometimes as many as 20 or 30 in a day. So if you don't want to sit in front of your monitor all day and trade like I do, you can look at Striker Securities. They will auto trade our account for you. And while I've been in the market for 30 plus years trading, we are relatively new to YouTube. So I appreciate if you guys can hit that subscribe button, the reminder bell, and the like button. We appreciate you subscribing to our channel. So what we want to do is look at the S&P 500 today. I want to start by apologizing if the volume is low. I got a new headset and I think it's worse than the other one, so I'll buy yet another. And I'm talking as loud as I can. All the volume is turned up. But this is a 4-hour chart of the S&P 500. Here are the March lows. You can see we have 5 waves up to the September 2nd high. And as you can see, we can check our Fibonacci extensions for that wave count. There is the wave 1 high, there's the wave 2 low. So you can see wave 3 is just about an exact 1.618 multiple of wave 1. We like that. We want to check our wave 5 relationship to wave 1. Make sure this is good. So there's our wave 1. We go to our wave 4 low, and wave 5 is more than equal to wave 1. So it's a good 5-wave pattern to the upside. Interesting to note, we're going to do a little Fibonacci retracement on here, and you can see that from the wave 4 low to the wave 5 high, this recent decline, which bottomed on September 24th, was a near perfect 618 retracement of that 5th wave. So there's a lot going on in here. We're going to get into it. We got a primary count, our primary wave count, and an alternate wave count, and all that good stuff. So here we are on a 2-hour chart of the S&P. And you can see there is our September 2nd high, our September 24 low, and our October 12th high. Okay, what our primary count is, and we can mark this off for you guys, is, well, let's get into the wave first. We're thinking it's a flat ABC correction. There's wave A down, there's wave B up, and wave C down would be near here. We can get our Fibonacci targets for that. Let's put in our Fibonacci extensions here. Here we go from the top. We have wave A down, wave B up. Wave C will gain equality with wave A at 3174, and it would gain a 1.618 Fibonacci multiple at 2942. So there's a lot going on in here, and we had a make or break count that the market hit just today. So let's get into a little bit of that. Again, here is the September 24th now low, and there is that October 12th high. And what we have in here, and I want to go ahead and get this, well, let's mark the waves again first, okay? So we'll start with that low, and we have 1, 2, 3, 4, 5 waves up here. That's a 1, that's a 2, that's a 3, we'll put 4 here. And as you can see, I already wrote in the internal wave count of this 3rd wave. It's a fractal. This is a 1, 2, 3, 4, 5. And within all of these waves, you have a 1, 2, 3, 4, 5. 4 stays above the wave 1 high, and 5 is the shortest in this case. 3 is at least equal to wave 1. We can check it here just to make sure that our wave count is right. 3 cannot be the shortest. There's 1. There's the 2 low. And you can see 3 gained more than equality with wave 1. The only couple rules you really want to make sure that you're paying attention to: wave 3 cannot be the shortest, and wave 4 low cannot go below, follow the dotted line here, below the wave 1 high. That has held. It's a pretty tight range, but it did hold. Okay, well, we got a lot going on here from that October 12th high, and if we can look at that, well, we'll look at it here. Okay, so from here we've got a down, up, down. That is that Fibonacci flat. It's not Fibonacci. It's a flat correction, but our parameters are pretty tight here. As you can see, the wave 1 high here is 33.97, and if we look back, we had, well, let's look at it this way. That's 33.97. So let's look at this ABC correction. Let's do a Fibonacci extension here. We got a pretty tight range for this wave count to be a flat. We've got an A down, a B up, and a C down. Okay, so C will gain equality with A at 34.04, and our make or break is the wave 1 high, because 4 cannot go lower than the high of 1. So we can draw our little resistance line here. We'll put that in, and that is just below there. That's pretty darn close. So we've got a tight range here. So for this flat to play out, A, B, C, and for this count to remain valid, the decline can only go, it cannot go lower than 31.97. I'm sorry, 33.97. My apologies. So there's our tight parameters on that. If the market is to go to new highs or to stay, we've got to make our break on the other end up here at the October 12th high. I'll get into that with how we did our primary preferred count and our alternate count. We want to get into this Fibonacci time sequence too. Okay, so there's our 9.2 all-time high, and there's a 9.11 low. Okay, so we've got this as an ABC correction, and that's wave A. Within that, you can see our Fibonacci time spiral here. We had, looking for a turn date, 8 Fibonacci days later on 9/10. It actually bottomed on 9/11 with a slippage of plus 1 day. Then we look at the next turn, and they're alternating high, low, high, low. The next would be a high on 9/15, and it happened within 1 day of slippage on 9/16. Then we were looking for a low on 9/23, and we got it. Fibonacci 1 day slippage later on 9/24. And here's what got a little tricky. We were looking at 10/6, and a lot happened on 10/6. It's right here, this bar, and we're looking for a wave up, and lo and behold, it went higher. It turns out that 10/12 is a Fibonacci 4 trading days. We had a weekend in there. So it's still possible that this wave count and this Fibonacci time spiral is valid. As long as that high holds, we can look for a low on October 27th. And you can see our targets here for wave C in this flat. Again, all-time high, we've got an A down here, a B up here, and a wave C at these target levels, 31.67 and 29.30. That's our preferred or our primary wave count. We also have an alternate count. Where do we know we're wrong? Okay, and we'll get into that here next. And here's our top alternate count. And here's the 9/24 low. You can see we've got 5 waves up here for 1, a wave 2, and then again there's that internal wave count for 3, and there's the ABC correction. Again, that tight range, 34.01 to 33.97. That is our make or break point. Okay, if it goes below there, it's a much bigger decline. This wave count is wrong. If it holds, then we're going to new highs above the October 12th high, which I believe, let me get back into that there. That October 12th high was 35.49. So there we are at the make or break on the high end and the make or break on the low end. I want to go back real quick to our preferred count with this Fibonacci time spiral. I want to point out that there's no guarantee there'll ever be a crash, and it's such a slight chance that there will be. But if there is to be one, they generally happen a Fibonacci 55 days after the all-time high. In this case, it would be 10/27. What we would need to see is persistent decline, gaps down, will go way below the wave A low here. It could just be an ABC flat, but if there is to be one, that's the place to look for it. So again, there's our wave count. Here's the bigger picture, and as you can see, we would look at something to go way down here near those March lows for a crash to happen. But our preferred count is just for a simple flat, an ABC. Okay, so that's it for the S&P. We'll cover other stocks and indexes at a later date. For now, take care, everyone.